Good morning. Today is Thursday, July the 27th. The time right now in Singapore is 11:12 in the morning. And overnight we have our FOMC meeting, and the Federal Reserve has actually decided to hike rates by an expected quarter point or 0.25%. And this was very much in line with market expectation. Now, of course, we also want to hear from the Fed chairman as to what he thinks is going to happen for the remaining of the year. And unlike June, where he says that there will be two more rate hikes for the balance of the year, including last night's rate hike, that means the market is only expecting one more hike for the rest of the year. But in yesterday's post meeting conference call, he actually leave himself a little bit of wiggle room to actually say that he is going to watch the data on a month-on-month basis before deciding. That means to say next month we won't have an FOMC meeting. The next one will be in September, and he leave the door open for one more rate hike in September, followed by subsequently, depending on the data that he mentioned, he may decide to hike interest rates even further. So the market was actually a little bit confused as to what he's trying to tell us, but I think he's only being sensible without closing the door to higher rate hikes, because as he mentioned, the core inflation is still very sticky, and he wants to see evidence that the core inflation is coming down towards a target rate of 2%. And of course, wages not to climb too high, because if wages goes up, it means consumers will be spending again, and both numbers will be watching. He'll be watching both set of numbers going forward. So the market was a little bit confused. The market actually went to a marginal high for the year. In the Dow Jones, you can see this 4 hours time frame chart. We have a new high at 35,633.61 overnight, and it did close a little bit lower, but I think the market is getting ready to profit take going forward. So today and tomorrow will be crucial. If we end up the week on a weaker note, that is the evidence that we need, and the market is in for a corrective pullback. So do watch out for the eventuality here. In the S&P 500, we also saw a marginal high for the year at 4,582.47, and it also ended up more or less where it started at the beginning of the night itself. So we can see prices are definitely not going much higher, and I think the risk here is that those people who are holding long position will be very itchy, that they want to take profit going into the weekend itself. So this could actually pans out to be a corrective pullback. In the Nasdaq 100, we also see that something similar. We did not have a challenge of the high. The high traded was 15,932. That was at least 2.5 weeks ago. So we have not seen a challenge of those high, and the market looks like it's primed to trade lower. Immediate target somewhere around 15,000 levels. So do watch out for that as well. In Asia, the Hang Seng Index actually pumped higher. Now it is getting towards the 20,000 levels. Let's see whether it can actually hold above 20,000. But in the meantime, this is basically a corrective rebound, nothing to see here. And in the Shanghai Composite Index, we also see a bit of a bounce. Now the market have a triple top going into this morning first half. The barrier to higher prices will be 3,245 to 3,250 levels. So let's see whether the market can go much higher. Anyway, I have a target at 3,280 levels, and this will be, to me, the top side for this move if the market can go actually beyond 3,250. Okay. And in the Nikkei 225, you can see that the Nikkei is also not doing very much. It's basically doing sideways with a little bit of bias to the upside. I think I have a target here somewhere around 33,340 to 33,640 levels. This could end up as a three-wave rally. Of course, if the market go beyond the 33,640, an alternate level to sell will be 33,760 to 33,950 level. So by and large, I am of the opinion that the Nikkei is probably primed to go down much lower, perhaps to as low as 31,000, even as low as 30,300 levels. Okay. Now in the dollar index, I'm showing you the futures contract traded at ICE, which is Intercontinental Exchange. You can see that the dollar may be actually pulling back, and as of yesterday, I did mention the possibility of a pullback, and this morning we have a low at 100.45, and I would like to see further pullback, ideally into 100.05 to 101.31. Let's see whether that actually pans out, and if that's the case, sorry, this is not 101, this is 100.31. So my mistake here, I will correct this on the spot. So you can see that the market is looking to trade lower, ideally into this bracket of prices between 130 to 100. So I would love to see a pullback before the market bounce higher. Immediate target is 102. I think the ultimate peak here will be somewhere between 102.20 to 103.30. So anywhere between these two levels could be where the market is heading towards. And in the euro dollar, we can see euro dollar has actually rebounded as what I was expecting yesterday, and the market went up to as high this morning of 111.18. And if the market can go up by and maybe another 50 pips, that would be ideal. At 111.50 to 111.80, that would be a better area to sell the euro dollar. And I think the market will be seeing a next leg of decline towards the 110 to as low as 109 levels. Over in sterling, we also see a bit of a rebound. The market has already traded into my preferred area of selling. The area is 129.70 to 130.10, and a high traded this morning is at 129.80. So I want to see prices come off from where we are right now, and if we do, then the market can trade below 127.87, 97 towards the 126 level. So the ultimate target is somewhere around 126. Over in the Aussie market, we do see a bounce this morning to 0.6820, and again, this is a level to sell, and I would love to see a extended decline below the most recent low here at 0.6715 towards the 0.66 levels. Over dollar yen is working out very nicely. I have always mentioned that 142 is a barrier to climb, and the market has picked up just under 142, and now it's coming down very sharply. This morning low is 139.40 levels, and it looks like we may actually extend lower below 137.24, and my target is somewhere between 132.30 to 134.10. Okay, dollar Canadian is a bit of a struggle. I think the market may actually struggle a bit higher. Ideal selling areas are 132.70 to 133.10 levels. So do watch out for the market to bounce up a little bit here before it comes back down. Now over in energy, we can see energy prices continues to edge higher. We can see the high trader is just under $80 per barrel, but there's no sign the market wants to come down yet. But in my opinion, I think the market is due for a pullback, and if we do see a pullback, my target is about $73.85, and that will be an area to pick up more longs, because I believe the long-term prospect of energy prices in terms of the WTI crude oil is actually quite bright. And over in precious metal, we can see precious metal continue to edge higher. I have changed my outlook for now. I think the market is probably going a little bit higher. I think somewhere around the $2,008 level, because this looks like to be a 5-wave rally. And if that's the case, I think the $2,008 will be one target to aim for before the market comes back down to $1,945. Okay. And over in the silver, we are also seeing something very similar. Silver prices and gold prices remains quite elevated, and this gives rise to the idea that this could be a 5-wave rally targeting $26, and looks like prices may actually go higher, and then before it comes back to test the $24.26, and then we'll see what happened then. Okay. And in Bitcoin itself, Bitcoin is not doing very much, although it has bounced off the most recent low at 28,977. I would love to see a little bit more deep into this area here at 28,300 to 28,740 levels. That will be a much better level to go long for a explosive move to the upside beyond 32,000. That's all I have for you. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye bye. Take care.